All right, welcome back, guys. Pillar number 2, taxes. I know sometimes taxes might seem boring and mundane and don't really want to spend much time on that. And I think that's why a lot of people don't. They just defer to TurboTax and defer to other professionals doing these things for them. But I want to expound upon some key principles that are going to blow your mind if this is something that's new to you guys. And for a lot of our society, these go untold, unknown, and it's a shame. These are some key principles that everybody could be implementing, regardless of where you come from and what you're doing. So I'm excited to dive into it. Let's get into it. So pillar number 2, taxes. The first idea that I want to come across and share with you is the cash flow quadrant. This was made famous by Robert Kiyosaki, and a very influential person in my journey of entrepreneurship and real estate investing. And if you haven't read some of his materials or his books, I encourage you, look up Robert Kiyosaki and read as much as you can of the things that he's released and has shared. So one of the things he wrote about was the cash flow quadrant. Basically, there are 4 ways to make money in our society. So on the left side of the quadrant, we have employees, and employees are actually taxed at the highest possible rate. Depending on how much money you make determines on the percentage, your tax rate. But traditionally, an employee is going to be taxed anywhere from 30-40% of their earned income. Now, also on the left side of the quadrant is a self-employed individual. Now, the difference between an employee and a self-employed is this person is still trading their time for money. They might have a few tax exemptions that the employed person does not have. However, they're still trading their time for money, which means if they don't go out and work, they're not going to get paid. Okay. Now, over on the right side of the quadrant are our business owners and our investors. Business owners are going to be taxed less, while the business is more of a passive income, and passive income is taxed less. So our business owners are going to be taxed anywhere from 10 to 20%, and our investors nearly taxed anywhere from 0 to 10%. It all becomes part of how efficient you are in terms of the things you write off. Now, on the right side of the quadrant, you have individuals who are earning passively. They're earning passive income, so that they're being taxed a lot less. Okay. Now, the goal of the 4 pillars of wealth training is to take individuals from the left side of the quadrant over to the right side of the quadrant. And you don't have to do it all at once. You don't have to quit your job. You don't have to quit what you're doing, but you need to have a plan and a strategy of how to transition to the right side of the quadrant. And it actually is not that complicated. We break it down. And so as you go through the course, you're going to continue to get all the tips and tricks and ways to implement these strategies on the side of what you're currently doing. And eventually your side hustle may become the big hustle and the main hustle if you want it to. When you look at this game board, I want to think about this in another way. So we see the cash flow quadrant. There's 4 ways to make money and to be taxed. Which game board do you see? Some people might say checkers, and I would say those are employees. Employees see a checkerboard, and business owners, investors see a chessboard. Now, the reason I say that is because as checkers, you got 1 to 2 moves, right? And in chess, you have multiple moves. You got a team you can work with. You have strategy. You can play defense. You can play offense. Now, I'm going to share my iPad with you one more time and show you why becoming a business owner and investor is so important. What I'm going to do is I'm going to show you an example of an income from an employee and a business owner. And we're going to use the same income for each of these individuals. So I'm going to draw a line down here. So on the left, we have our employee making $100,000. On the right, we have a business owner or an investor who's making the same amount of income. As an employee, what's the first thing that's going to come out of this person's wage or paycheck or income? It's going to be tax. We're going to call it 30%. So $30,000 is gone right off the bat because of the amount of tax that is being paid. That's going to give this person about $70,000 left over in income, take-home pay. Now, after that $70,000, what does this family or individual need to do? Now they're going to start spending their money on expenses. And let's face it, the majority of our society is living paycheck to paycheck. So it'd be very easy to say their expenses are in the amount of $70,000. And that's what we're going to call it. So in this scenario, an individual started with $100,000 and ends up using all of it and has zero left over at the end of the day. Now, when we look at the investor or the business owner, this individual has the same spending habits, has the same income, but yet they get to approach life a little differently and can start doing some cool strategies that everybody should be doing. What happens is this becomes a line. We'll call this our line, and maybe you've heard this, something above the line or below the line. Well, what happens as a business owner and an investor, you get to bring your expenses above the line. So you're going to write off as many of these expenses as possible before you pay tax. So that would leave us a leftover of $30,000. And this is what we call our AGI, adjusted gross income. That's what government gets to tax, is that adjusted gross income. So now this individual shows, oh, I've made $30,000 this year. So the government will tax 30% of that, which is $10,000. And if we look at that, that gives us a leftover $20,000 to play with, to invest with, to do what we want with. Which side would you rather be paying tax? Which side allows you the freedom to transition your personal expenses into the business expenses? So I invite you to start making the change over to the right side of this example or this demonstration. Why should we make the change? Well, let's look at this pie chart a little bit deeper. 74% of individuals in the top wealthiest 1% in our country have done it through business and have done it through real estate investing. Now, as an employee, you have 15 write-offs. And as a business owner and an investor, you have over 350 write-offs. Why is this? Some of us might be asking, well, that's not fair. It's the same tax code for every single one of us. It's the same game board. You get to decide which game you want to play. Do you want to play checkers or do you want to play chess? Now, you don't have to be a complete chess master. You might be a checkers player, but you like to play chess as well. And so that's what I'm inviting you to do, is to start learning some concepts that's going to enable you to access more write-offs so that you can save money in tax as you start to position your life to the right side of the quadrant. Because what the government does is it incentivizes the things, the people, the businesses that do what they can't do very well. And they can't do two things very well. They have trouble with creating affordable housing, and they have trouble with creating jobs. And so for those two major things, they're going to incentivize individuals who take on entrepreneurship, business, real estate investing. And that's why we need to jump on the ship, get on board, learn the strategies, and start implementing. Now, how can you become a business owner? It's really simple. Raise your hand. I want you to participate. If you're watching this, raise your hand. Raise your hand, and I just want you to repeat this after me. I am a business owner. And literally right now, what you have just done is you've gone in startup mode. Now you're in startup mode. You can start tracking your expenses. You can start tracking the cost of the lemons, the ice, the lumber for the stand, and the clothes that you're going to wear when you start selling your lemonade. And as soon as you make your first sale, you can write off all those startup expenses and your future expenses going forward. It's literally that easy. Now, are you going to go build a lemonade stand? Probably not. And that's not what I'm suggesting. But what I'm suggesting is that you don't need to create the perfect product, idea, or service, but that you need to learn some type of marketing, whether it's an affiliate type of marketing, market somebody else's product that you're already using, learn something that is going to help you sell something. That's business. Sales is business. So you need to sell something, whether that's a service or a product, and it doesn't have to be your own service or product. It can be somebody else's. You can affiliate to get started. Learn all these skills, and then later on, it will become your product or service. Now, investing in real estate is the other way to get some of these tax advantages. And the reason why we like real estate is, one, rentals. When you invest in a rental real estate, you often will show a loss of income. And you might be thinking, well, why is that good? You show a loss of income on paper, but in reality, you're gaining all kinds of tax advantages, income advantages, and time freedom advantages. Now, I want to give you some action steps that you can take right now. Again, schedule another discovery call with a wealth architect. And on that call, you're going to be able to ask about our Earn and Learn program, where you can literally earn anywhere from $1,000 to $10,000 a month per qualified transaction and sale. And you can learn a little bit more about affiliate marketing and get one-on-one assistance with getting a business set up for yourself. Now, I encourage you to do that because it's what I did, and it has transformed my life and allowed me the opportunities that I have to teach others how to do it. So I invite you to do that. Schedule the call with your wealth architect. They'll get you some more information about the Earn and Learn program and get you plugged in. What I have shared with you guys today is a snippet of our tax and legal day 1 and 2 courses, which are taught by our practitioner instructors. It's a 2 8-hour courses within these 2 classes here. And Mark Kohler is the individual who teaches those classes. Now, I just briefly went through some of those concepts. He goes into depth and talks about some really advanced strategies. And I'm excited to refer to some of those things on the discovery call as well. What I invite you to do is schedule that discovery call so that you guys can start unlocking the tax code right now and start a business on the side of whatever you're doing right now. And it takes some action to get started, of course, but you don't have to recreate the wheel here. We'll literally give you the tools and offer some of the supports that we have and mentorship that will get you plugged away, get you plugged in, and get you going. To your success, I look forward to seeing you in pillar number 3.